2021. Thank you so much for being here today with me. I really appreciate it. Today we're going to talk about the opposite of what we normally do, which is swing trades that can manifest themselves into day trading opportunities. We've had some decent day trades recently, and those day trades that kind of gave us clues have now manifested into swing trading opportunities where they look a little bit better on the charts. Specifically, we're going to talk about really 3 big tech companies, 4 if you drop Apple in there. We're going to also talk about how the major indices are all performing, how the lighter volume price action is actually very bullish. We're not seeing right now signs of selling. We did have the VIX expanding on Friday. We did see the market go up while the VIX was going up, which is counterintuitive and quite honestly a little bit of a disconnect. We said we were looking for profit taking on Monday. We kind of saw that Tuesday and Wednesday where the indices kind of paused. There's really no other way to put it. However, if you're a veteran stock trader or even a brand new one to the stock market, you know that light volume pauses after a momentum move in the direction of order flow is actually very constructive. So we're going to talk about those tech stocks today. We're going to drop some hints on crypto stocks today. We're going to talk about cannabis stocks today. But the main focus is going to be on technology. And then we have a few other 5 or 6 other stocks that we're going to take a look at today too. So by the way, if you find these videos helpful, definitely click down and subscribe. I'd really appreciate it. You'll get updates. Make sure you click the bell there as well. But more importantly, I want to help you. I want to help you personally. If you have any questions about what we talk about in these videos, definitely leave a comment below the video. We get back to you as soon as possible, and give us a thumbs up to let us know that you like that kind of content as well. Okay, so we're going to head straight over to the charts. We're going to get right into it. Actually, let me share the screen. And we will jump right in. Okay. So first, we're going to start out with technology. As we said, technology is the place to be over the last week or so. Now, again, technology was not prior to that. You can actually see here, we were kind of in a pause, kind of in a nowhere land, right? They're kind of in that gray zone where there's nothing to do. And we kept saying the market's strong, tech isn't. The market's strong, tech isn't. Now technology stocks have expanded a little bit and rallied and paused right near all-time highs. We'll take a look at the Qs as well. And you can see the Qs. We were waiting for them to break out of this longer term, what's known in technical analysis as a pennant. Don't guess. Let the market tip its hand. Let the stock tip its hand. And now the Qs have also rallied up. And they're finally joining the SPY ETF and the general stock market overall. SPY is kind of leading the way. What's interesting about the SPY, too, is we're going to talk about electric vehicle stocks. Tesla is actually getting hit still. And the SPY not rolling over. The biggest thing that the market lacks right now is sellers. And that's not a bad thing, obviously. It's the lighter volume is driving day traders just a little bit batty during the day. However, if you're on top of your game and you're in the right stocks and you have the right scanners and you understand order flow, pockets of opportunity pop up. And now I'm going to show you some of those pockets of opportunity. We're actually going to talk about probably the stock at the top of my list this week, which is Twitter, which is kind of interesting in Twitter. If we look at the hourly chart, it's been in a pretty solid downtrend for over a week and a half. And if you even take that a little bit longer, it's probably going back the beginning of March, really. We're actually pulled back pretty hard, right? But this one candlestick here is interesting. That one candlestick, and again, this is where trading becomes fun. This is where trading, you start to put the pieces together. This day right here in classic technical analysis, this is technically a bear flag, and you would expect the stock to roll over pretty hard. It actually rallied, hit resistance, had a bearish U-turn. Bearish U-turn, by the way, means it trades higher and closes back down below the previous day's high and closes below the open. It's one of our most powerful reversal signals. However, if you're a good trader, if you're on top of your game, you pay attention what the tape is telling you, that 1 hour where the stock reversed, despite the fact the longer-term bullish order flow, that was the igniting candlestick to lead to a really powerful 2-day rally. And again, if you're not day trading, don't worry about it. These are the last 2 opens that we had. This was yesterday, and it's yesterday afternoon, and this was the prior day coming off of that explosion. So what does that mean for Twitter right now? Does that mean it's a just get in there and buy no matter what? No. Well, we're kind of now $4 or $5 past the optimal entry. It's rallied nearly $8 in basically 3 days. That's a pretty decent move for a stock that was just in a bearish trend, and it's coming up to resistance. So I'm looking, and again, this is a big question that we get all the time, and I'm going to give you a quote that you definitely want to write down. If I like the stock as a swing trade, I'll definitely day trade it. Okay. if I like the stock as a day trade, that does not mean I like it as a swing trade, and that has to do with profit potential. So Twitter's lining up as a good day trade again today, but it's got resistance not too far away. So we're looking to day trade Twitter up to that level, looking for a pause just around the 72 level. And then once that pause happens, then we're going to look for Twitter to launch into new all-time highs. So that's today's day trade in Twitter stock, and then the next trade, the next swing trade after that. So like I said before, the day trade in this case is setting up the swing trade at different levels. So the other two stocks, one that's fascinating that we talked about is, again, not perfect price action, which you can see here, Facebook just in a prolonged trading range, right? But then this happened. This, in our community, we started to notice a lot of buying, a lot of order flow. There's something going on under the tape in Facebook. We weren't trading it actively yet because it didn't meet the perfect criteria yet. Maybe some day trades in there. I know Guy Lucchesi in our community took advantage of this a little bit more than I did. So nice job, Guy. But once it broke out of that range, it was a precursor to this, which made Facebook an obvious trade popping out of that level. So that's two. So we have Twitter, we have Facebook. Microsoft has been on an absolute tear and now has paused for a couple of days above right near all-time highs. And yesterday we also talked about Apple. Apple finally got out of that level. We said we want to see it close strong. We want to see a bullish candlestick. We want to see it be well bid. Got all of that. Everything that we wanted to see, we got in Apple yesterday. So segueing away from technology stocks, we're going to jump into crypto stocks now. Crypto itself, Bitcoin specifically, we'll get into looking at the Bitcoin futures, and we'll go to the continuous contract. You can see that we actually broke out and pulled back. Now, if you remember a couple of days ago, we actually said when it breaks out and fails, breaks out, makes new highs, but barely makes new highs. It looks good on the record books that it's making new highs, but it didn't push higher. If you read Reminiscences of a Stock Operator by Jesse Livermore, he said the rallies grew feebler and feebler. So they're actually making new highs, but not making a new really bullish run in this case. So made new highs, not really that higher. Made new highs, not really that higher. So I do like the fact that Bitcoin pulled back. I do like the fact that it consolidated a little bit here, but over the next month or so, I'm expecting it to pull back. However, trades in Merit today, after the stock made new all-time highs, just blistered its way higher. This crypto stock is one that I'm looking to buy today. It's actually up $2 already today. So I'm looking for the stock to settle in a little bit this morning. If you're looking for a new swing trade in Merit today, you'd be looking to buy, and yesterday's low being the stop loss, and the last move in Merit was over $25. Even if we get 20 out of that, the risk reward is spot on. The other crypto stock we're looking at is RIOT. Just does not have the same price action. If I had to choose between the two, right now for me personally, it would absolutely be Merit. Now we're going to shift over to financial stocks and specifically PayPal. And then we're going to take a look at Square. PayPal was actually called in our community yesterday in our morning game plan, which, by the way, if you want to attend the morning game plan meetings, click below and learn about it. I'll leave the link below the video. They're every day from 8:30 to 9:30, right before the market opens, usually around 9:20, where we map out all of the best ideas that we're planning on trading that day and that week. It's 5 days a week, those meetings. So you can see here clearly PayPal and Square, both of them have really good solid rallies over the last week. I'm going to get into some other processing stocks. I like them, but I don't like them until they clear these levels. So this is really the difference between a rookie trader and somebody who's been doing this for a while. You might call me a professional stock trader. You get up to that level, and I don't want to trade where sellers did something significant last time. So if we take a look at Square and we take a look at PayPal, both stocks look great over the last week and a half. Now I want to see them stay above this level. The next level that I have for PayPal specifically is 275. So we're basically looking at a $20 move through this 255 level. The other stocks in that arena where you can see that there's been some buying over the last 5 to 7 days. Visa needs to get past this breakout level. MasterCard and Capital One, just to give you some ideas. Some other ideas that are on the table. We're going to talk about the EV stocks, which we mentioned before. We're going to go through these. Tesla. Clearly, Tesla needs to get above 700 and stay there. Again, for me, very similar to what I talked about before. I don't like to trade where it can't get through. If it's lower than that, I get the question all the time. Well, if you like it above that level, why don't you buy it now? Because it can't get through that level. It's not just a matter of the entry. It's not just a matter of liking the trade. You need to earn significant reward to justify the risk. And right now, the reward potential as a swing trade in Tesla stock is limited until it clears 700 and stay there. So NEO, obviously NEO had great news. It's looking awful lot like that NEO news about a week ago was sell the news, where they had year over year massive increase in deliveries, and there's been nothing but selling since that 4 days ago. Also XPEV. Yeah, I love to trade these stocks. I want to trade these stocks. They're just not bullish right now, and I'm not ready to short them right now because the easier trades are on the long side. Cannabis stocks as well. Again, our community loves to trade these stocks. We want to be in them. There's just nothing to do yet. We pointed out GRWG. It keeps contracting tighter and tighter and tighter. Mark my words, this stock is going to have a really big move in the next week or so. But we're not going to guess. They're very similar to what we talked about in the Qs before. Let it tip its hand, then jump on board. So the other stocks here in the cannabis sector are TLRY, which again, you can see it's breaking down here, and CGC. So do not jump the gun. Do not get in early. Let the stock have obvious order flow. At least one day, at least 1 week, preferably a couple of weeks before you jump in. Otherwise, you're just guessing the bottom, and we all know that's not the easy way to trade. The easy way to trade is to spot obvious order flow, hop on board, piggyback what they're already doing. That's where the easier trades are hiding. We're not seeing that here yet. I know you want to trade these stocks. I want to trade these stocks. They're just not bullish right now. Some other stocks on the list right now we're going to take a look at for today. X, we mentioned yesterday. I'm going to still be watching X today. TRMB, also a really good, strong stock with the pullback. And last but not least, we're going to finish up with Snap. You can see Snap just broke this trading range. Now, the problem with Snap is that, again, 64 is the resistance. So this would be another example of a day trade, very similar to the stock that we looked at before. We were looking for it to push up and pause and then look for the next move. So I like it as a day trade today up to 64, and then a new swing trade on a pause at 64. So, gosh, we got a lot to talk about today. There's a lot going on. NASDAQ finally woke up. Light volume pause in the SPY, which is technically perfect. It's driving day traders a little bit frustrating during the day, where the morning we're getting amazing, amazing trading, just really good first 90 minutes of trading, and then the market just kind of like blipping sideways in the afternoon. We did have one good trade in Twitter again in the afternoon. When you're in the right stocks, it becomes easier. So I can't stress this enough, especially if you're a new trader. If the market dries up in the afternoon, now again, we did have FOMC minutes this week. If the market dries up in the afternoon, preserve precious capital. You're not getting paid by the hour. You're getting paid by the month. Only accept risk when you see good volume, when the tape is telling you that there's good activity, when you're seeing well-bid candlesticks, higher highs, higher lows, across multiple time frames, then jump in there. If it dries up again in the afternoon, be patient. You don't want to dig yourself a hole as a stock trader and then really becomes obvious and you make it back and you're back at zero. Be smart with your capital. Only accept risk when volume and volatility are both there, and reliable, predictable profit potential. All right. If you have any questions, absolutely click down and leave me a message below in the comments. We'll get back to you as soon as I can. Leave a thumbs up if you've been helped by these videos or you like these kind of content. I would really appreciate it. It means a lot to me. And have a great day. I look forward to seeing you soon. Take care now, everybody.